Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, we will be watching a key or potential key economic event, which could potentially give us an indication of when the Fed may cut interest rates. As well as that, even bigger and better than that, I'm joined by a very, very special guest. But before I get into introductions and us getting ready for this big event or potential big event, which is starting in about 14 minutes' time, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks. I did again. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, obviously, we have CPI Day. So, happy CPI Day. But like I said, I have a special guest, a new partner in crime, who I want to bring in and introduce. He's just recently joined us, and to be fair, we are incredibly lucky to have him. Please welcome our new market analyst, Motterson. How you
Hello,
doing, buddy?
James.
How are
Hello.
you?
Hello, James. Hello, everyone listening to the live stream. I hope it will be helpful for you and it will be more positive for our. Thanks, James. And I hope it will be very good. I'm Matasem. I'm from Egypt. Have been in trading around since 5 years ago. I'm also specialist in technical analysis. So I hope it will be a very, 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 very interest live. Thanks, James.
Yeah. Well, welcome to the family, buddy. And like I said before, One Royal is very lucky to have you.
Thanks. Thanks.
So today, you and me, we're watching the CPI as it unfolds. Due, like I said, now in what time? Well, ooh, just over 12 minutes time.
Yeah.
Now, first of all, I think for potentially for new traders who don't, are new to the market, they might not know what the CPI and why it's important. So, of course, CPI is short for the Consumer Price Index, and basically it measures the change in price of goods and services the consumer pays. In other words, inflation. Now, the main thing about this, and I have no doubt you agree with me, buddy, but the CPI always provides a sort of guessing game to what the Fed may do. Wouldn't you agree?
Yeah, I'm totally agree with you. Yeah.
I mean, like I said, I think this one in particular is really important because I think, the market does watch the CPI number to try and predict what the Fed will do with interest rates. And I think December they disappointed the market a little bit, didn't they? Because they did drop hints that they were going to do several cuts this year before December. But then after December, the market's only pricing in maybe two. What do you reckon?
Yeah. Um, I think we are in consolidation because the previous CPI was like forecast as
Hmm.
forecast. Also, the previous CPI at December also like forecast. Uh, I think market is stable. Also, the the tariff that we will talk in the live.
Mm.
Also, a lot of things that will happen these days. So um, the expectation, um, it's not easy, not
Yeah,
easy as previous because there is a lot of things. There's a lot of volatilities. That's why we will discuss it in live stream.
absolutely.
Yeah,
Absolutely. I mean, like I said, I think, you know, the Fed has said, and this is why I think inflation is watched very carefully. Of course, it's one of the, they have mentioned that they're going to maintain their policy rate between 4.25 and 4.5%. Um, and Powell himself yesterday, because don't forget Powell, of course, is still doing his testimony in Congress. But yesterday he said, with our policy stance now significantly less restrictive than it had been, and our economy remaining strong, we do not need to be in a hurry to adjust our policy stance. But there's a couple of things I want to talk to you about and ascertain your opinion on, of course, because the one thing about inflation, and we'll look at inflation over the last couple of months, is the dark clouds of tariffs on the horizon. I mean, this is proving, a real big fear for the market. And again, this is an inflation increaser, isn't it?
Yeah, yeah. I think so. Yeah.
No, I think it really is. So I think that's going to be potentially a real danger of tariffs as well. And here's the other thing, don't forget, the non-farm payroll, of course, came in slightly lower than expected.
Yeah.
So, they have got this rock and a hard place type thing where they are worried a little bit about maintaining inflation, especially as they managed to get a bit on top of it, a little bit on top of it. But at the same time, they then have tariff threats, which could obviously increase inflation. So that is the other thing about it as well. Expectation, of course, year on year is 2.9%, and month on month, it is supposed to be 0.3%. This is what they expect. But as we mentioned, slowly but surely, the last couple of months, there's been a slightly steadier rise. Like September was 2.5, October was 2.4, November was 2.6, December was 2.7, and January was 2.9. So there is a little bit of an increase on this, but they do think it's going to hold steady, don't they, for this reading? Yeah. So they do think it's going to hold steady for the reading. Now, obviously, this is a big event. The market is excited, and they're really hoping that this event will point to a rate cut in June. Do you think that's the earliest we potentially could see the Fed cutting rates?
Maybe. Yeah.
Maybe in June, yeah?
Yeah.
Mm-hmm.
Yeah. Maybe in June.
Yeah, yeah. I
Um,
mean,
also, after imposing a tariff like a 25%, it will be make like on steel, aluminium, and some commodities like this will make a pressure to
mm,
increase the inflation. So
mhm,
they didn't have an option to reduce the interest rate. I think.
mhm.
I think. Do you think this?
Yeah, I think I agree with you on that because they are in a stronger position. Okay, because I say the Fed obviously looks at inflation. They're not so inflation obsessed. And though it's expected to come in at 2.9 above their 2% target, the labor market, though the NFP came in lower, the unemployment rate stayed
Yeah.
the same. So again, they're in a stronger position, say, for example, than the Bank of England, ECB, where they're having to be forced to cut interest rates to try and put some steroids into the market. The Fed is in a little bit of a better position. So I think there's a lot. I mean, I mean, the crazy thing is that whatever they do, they're going to be very slow to cut rates. They've said themselves. So they're in a far better position. By the way, on a side note, I noticed you said aluminium.
Yeah.
Well done. Well, see, that's the right way of saying it. So
Yeah. Right.
so hats off to you, sir, for saying aluminium in the right way. Well done, you. Anyway, okay, we got 5 minutes, well, just under 5 minutes now to go before the main event. I thought we'd have a quick look at some potential scenarios. Okay, and let's talk about these. Let's get into potential scenarios because this is always quite exciting. Potential scenario number one, obviously, it's announced higher than expected, and the USD gains strength because usually when CPI comes in higher, the market assumes the Fed's going to increase interest rates. So that's going back to the standard theory of what the market will do on the NFP. Then, excuse me, you have potential scenario. Have I missed one? Yes, no, I have. Yeah, potential scenario number two. It's announced lower than expected, and the US dollar weakens. Standard. And then, of course, you have potential scenario. Excuse me. Potential scenario number three, and that's higher than expected. And this is a different type of scenario. The dollar weakens as the market pushes back on a rate cuts in the future. Okay. And finally, scenario number four, there's actually one more scenario. Announced lower than expected. The US dollar gains strength as the market believes rate cuts are incoming. Okay. And finally, the final scenario, scenario number five, comes in as expected, but it's already priced in. And, we're getting excited about nothing. What do you reckon? What's the most unlikelihood of those scenarios do you think could potentially happen?
Yeah, position. We are in a position. We are in a hard position. It's not easy to expect the scenario, but um, um, I'm subject to scenario number 3 and 5.
Mm-hmm.
Yeah,
Mm-hmm.
it's potential scenarios to be to see in the market.
Yeah.
Scenario 5, the market priced as expected. Yeah, because dollar was in overbought.
Yes.
Yeah. Also, scenario 3, the market will expect a more cut in interest rate.
Mm-hmm.
So we will see a week in US dollar, maybe.
Yeah. Yeah.
Yeah.
I mean, like I say, I remember 2022, obviously, when the we were facing the global inflation crisis, and this was a real exciting market winner. And like I said, the likelihood of it coming in at 2.9 is expected. I think that's going to be the case, but we'll have to wait and see. Anyway, we now have less than 1 minute 30 seconds to go. So let's bring up the charts so we can start getting ready straight away. Of course, we talked about this before coming on air. We both like gold. So sorry for those who don't like gold. We love gold. It's my first love. So as we see at the moment, obviously it's coming off those all-time highs, which it did in yesterday's Asian session, isn't it? So we're seeing that because obviously a bout of profit taking and obviously a slightly stronger dollar, but currently trading around $2,877. Do you think this one could be a potential mover?
Maybe, yeah.
Definitely. What would you say, because obviously you're more of a technical guy than I am. Where would you say currently the major support may be on gold, or an area of interest at least?
Um, I think gold now in a key area because it faces at the left side like a breaker block. That's
Yes.
why gold stay at this point at 2080.77. Also, we have moving average 2000. If we close below this moving average, we can see gold at 2832.
Yes.
It's like another key level.
True.
If we break it, we can see gold
Oh,
to
hang
make.
on, hang on. It's coming out now. Let's have a look, see what the movement is. Let's see what the movement is. Let's see what it's coming at. Hang on. It's dropped down. It's moving down. Where is it? 2,869. 2,869. See what that number is. Let's see what the number is. I got to use my trusty phone to get the information as quickly as I possibly can. Let's see what the number is. Come on, come on, come on, come on. If you get it before me, buddy, let me know. Let's have a look.
Still, yeah. We are more as expectation.
Well, is it 2.9?
Yeah,
Let's have a look. Oh, you're getting 2.9. I'm getting 3% actually. So slightly higher than expected.
we are higher than expected. It's positive for US dollar.
Yeah. Slightly higher, not massively higher, but
Yeah.
slightly higher. Coming in at coming in at 3%. Month on month, though, comes in at 0.5. So that's a lot higher. Well, not a lot higher, but it's a fair bit higher than anticipated, because don't forget they expected 0.3. So 3% year on year, 0.5 month on month. Core, again, was a bit more expensive month on month than 0.4. And again, for core year on year, it comes in higher at 3.3. So there we go. That's clearly is a sign that, now we've had several months steady of inflation moving higher. And like I say, now you are seeing a little bit of dollar strength. I don't think this is enough realistically for the Fed to change tack and increase interest rates. Do you?
Yeah, maybe. Yeah,
Yeah.
maybe we will still as interest rate. There is maybe no increasing or decreasing. We
hold it
yeah,
steady. Yeah, no,
yeah,
I think, yeah,
yeah.
I mean, if you look at, we got the euro up now. The euro is like dropped down. It's come under a fair bit of pressure there. Trading at 1.03283.
Euro decreased by 0.40%. Yeah.
So the euro is under pressure. Let's have a look at the cable as well. Cable as well. That's come under a fair bit of pressure. I mean, I think, like I say, Fed are in a far better position than the Bank of England and the ECB, where they're forced or going to have to cut interest rates, whereas the Fed can hold steady, can't they?
We will see at 5 p.m. Fiddler's Chair Powell testified.
That's right. So because then you can see what he has to say about this.
Yeah.
But I think they're in a far better position to hold everything steady. Anyway, that was pretty exciting. We got some other things coming up. Obviously, you've already mentioned, of course, we got Powell testifying, UK GDP, German CPI, US PPI, Producer Price Index. That'd be interesting to watch. And obviously, US retail sales still to come. But anyway, today, the big news, US CPI comes in higher than expected year on year. Okay, so did month on month. So did the core month on month. And so did the core year on year. So it looks like the Fed is going to be very slow to cut interest rates. They're in a better position than the Bank of England and the ECB, so they don't have to. But there we go. That was the outcome of today's breaking news. CPI year on year announced higher than expected. Anyway, buddy, it's been an absolute delight. It's been really great having you on our very first watch along. How did you find it? Did you enjoy it?
Yeah.
Brilliant.
Perfect. Yeah.
Okay. Well, like I said, we'll do a lot more of these, buddy.
Yeah, I'm really excited.
Yeah, it is, mate. It's been absolutely awesome. But like I say, do you want to say goodbye to the good people?
Yeah.
Yeah. Do you want to say goodbye to everybody and say see you soon?
There is no comments.
No, there's no comments at the moment. No.
Okay.
Yeah. Don't worry. And like I say, people remember this is a live show. So you can, what does them say? You can ask us questions. I mean, jump in, say anything, ask us, tell us your opinion, even interact, because we are slowly trying to build a community. But anyway, as we wrap up, do you want to say goodbye, buddy? And I'll say goodbye to the good people.
Yeah. Bye. Goodbye.
All right. All right. Thanks again, mate. I'll speak to you. See you soon, mate. We got a lot more to do. Right. There we go. That was US CPI year on year, all across the board, month on month. Everything came in higher than anticipated, meaning the Fed are in a better position and they can literally sit on their hands and not, as Powell said yesterday in his testimony, we're in no rush. And it clearly underlines that they're in no rush. Anyway, remember, this is a live show, so you can ask me questions anytime you want, or ask my colleague as well any questions when we're on it together, or share your opinion. Let us know what you think about the US CPI. Let us know what you think about gold or the euro. And if you're not watching this show live, by all means, go into the comments below and put in a little few things of what you think the market's going to do, or when the Fed is finally will cut interest rates again. Is it going to be June, or will it be sooner? Anyway, till next time, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, there are the risks at hand before entering any trade. Till next time, every single one of you, trade safe.